All right, what is up? What is up? We are back with video 7 of this advanced market structure PDF series. So let's get into it. So the next example that we were going to do is CAD CHF on the daily. So what do we see, right? Well, we notice, structure is starting to break to the upside. And we see structure being broke here, but you see this retracement before structure being broken again. Price doesn't get all the way down into that area. So most likely now we're not looking at that point of interest, right? Structure got broken to the upside again. So where's our next point of interest, right? And that's in that area of broken structure, right? So on a lower time frame, we will go to this area. So we're on the daily. When we drop down to the 4 hour, now what do we see? Wow, this is really juicy. This is super clean. So what do we see here, right? Prices heading towards that point of interest, right? And there we go. So prices heading towards our point of interest. And look what happens along the way, right? So we get some indecision, right? We get a point in this structure where there is no direction, right? But you can see market breaks to the downside, right? But it's only breaking to the downside to reach this area here. So you could be, but I wouldn't technically be a seller in this market. And so after, this little sell from here to here, we finally reach that daily structure, that zone. And what do we see immediately from that area, right? A strong push to the upside, a strong impulse to the upside, right? And a retest on that structure. So this could have been an entry here, but let's say we miss this. And what do we see again, right? Structure flowing, right? Now we're starting to see bullish order flow, right? So see a huge break of structure here, retest, another break of structure here, and a retest, right? So here could have actually been our regular or our real entry. You have two break of structures from this higher time frame point of interest. So the the direction of this market now is pretty solid. It's solidly confirmed that, it's bullish now from this daily point of interest. So, oh, I guess we have another example on here still. Give me 1 second. Okay, so here is these next point of interest, right? So we have 1 and 2, right? So here's 1 and here's 2. So look at this now. We go from the daily, the 4 hour, and to the 15 minute. Go to the 15 minute and look at what we see. So from level 1, right, that first break of structure here, right? Price gets back into this area. And what do we see, right? Yes, there is a break of structure here. Yes, for those of you that might ask that question, yes, there is a break of structure here. Yes, you could have bought there. Yes, it would have been okay. Yes, it would have came back and broke you even. Yes. Okay. So what do we see here, right? We see another little break of structure from this 4-hour point of interest, right? This one's pretty simple, choppy retracement back into the entry and you buy. So now look at number 2 here, right? So break of structure number 2, right? We broke structure to the left there, you see, and price retraces back into that area. And what does it give us? Well, same thing it gave us at level 1, right? We see a huge breakage structure. Where's the top of that range, right? It got broken. Here's the bottom. Okay, it's too messy now. Top, bottom, right? Right? Which one gets broken? Top one does. So we expect price to retrace back into that area and give us some sort of rejection, right? So here's where our entries could have been. Now that was a breakdown from the daily down to the 4-hour, down to the 15-minute. So here's what everything would look like on a full view of the 1-hour time frame. So look right here. Here is that daily point of interest, that rejection from the daily point of interest. And let me zoom in and see if we can see better. And here are the entries from that 15-minute time frame, right? So you can see, let me plug this in right quick. So you can see, right, these little entries are such a small drawdown. The risk to reward on them is crazy. And around this first, right? Remember we had 1 and 2. Around this first point of interest, this first break of structure, this trade was 200 pips, right? So, yeah, man, it pays. It pays to wait for a break of structure. Doesn't matter the time frame, but it pays to wait for a break of structure. So that was a full breakdown on CAD CHF. So now we have CAD CHF again on the 15-minute time frame. About 5 minutes. So look at what we see, right? Okay, cool. I got another full view one. So look at what we see right here, right? First off, first thing I notice is that there is bearish order flow going on, but we're on the 15-minute time frame, right? So I don't know what's retesting here, but what we see, right? We start to see minor breaks of structure to the upside. We started to see breaks of structure to the upside. Now, there's this little inefficiency down in this demand zone here. After price retests from this previous sell side structure that got broken, price comes back and fills that inefficiency. So what do, right? Well, we're on the 15 minutes, so the risk to reward isn't that bad, right? You could buy here, but let's say you want to be more technical, right? So we go down to the lower time frame in this area. So we were on the 15-minute time frame, and we dropped down to the 5, right? And what do we see, right? Well, here's that inefficiency. Keep that in mind. Here's that break of structure, right? Well, when price comes back into that area, we wait for that initial rejection, right? Yes, we could be buying there, right? We could have an aggressive entry, or we could be passive and wait and see if this is actually the trade that we need to be taking. So from this rejection here, there was a high and a low. So from the rejection, from this 15-minute demand zone, this inefficiency, right? It's fair value gap from this demand zone. Which direction did structure get broken, right? To the upside, okay? And if we look back where structure is here, back down at this 5-minute demand zone here, there's another inefficiency. There's another fair value gap. It's the same thing, right, as an inefficiency. So we look in this area, and from this low to now this high that has broken this structure, we can place a Fibonacci. And you can see, down in that area, we place a fib from that low to the high that broke structure, right? So now we wait, and structure lines up around our 72 fib area, correct? So this would be where our focus should be. This is where our eyes should be drawn to. So entry here, 2-pip drawdown for, I don't know how many pips, I didn't put it in the example, but right. So here was the 15-minute, 5-minute breakdown Fibonacci trade. Technically, this could be OTE, right? Even though it's just a regular Fibonacci entry. A lot of people like to call it OTE. It's fine. Call it what you want. Anyway, that was the 5, and then the full view of the 15-minute time frame. So here was the initial rejection, and then here was our entry. So all this profit here. Such a beautiful trade setup. But all right, y'all. So that's going to end it on this example, and I will catch you guys in the next video. We'll start on CAD JPY. So catch you guys in the next video, and peace out.